Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.
Hello and welcome to Nirmal, ladies and gentlemen. I'm Hiral Dadia. We have with us Rohan Suryavanshi, Head Strategy Planning at Dilip Buildcon, joining in. Rohan, welcome to the show. Pleasure to speak to you in such unprecedented times. If you go to see that the last time when we spoke as well, there were a lot of concerns that the infrastructure sector as a whole was facing. How would you describe the transition from the last week of March to now that the revival has started to happen?
I mean, there have been a lot of steps that the government has taken ever since the lockdown came into now. Now there were steps that they've taken in terms of easing the way of doing business, and with that they did that through reducing bank guarantees, waiving off the milestone payment requirements and making it monthly payment, and yada and yada. So there were certain things that they did which would ease on a regular basis of work. And the second thing that they've done is they've also brought in a lot of projects, new projects, and a lot of bidding has happened. So bidding wise, it has been very, very active and aggressive from the government's part. So I think both the things that could have been done, to make sure that the current pace of work does not suffer, and B, also to make sure that there's a good pipeline of projects going forward. I think both those things, the government has done a good job. And even we are sitting at our highest possible order book right now. So obviously it's been a good sort of year. And more than that, what's important even about the order book that we have, that the majority of the new projects that we've been winning are from sectors besides roads. So roads now, our total order book is only 50%, while other sectors are now 50% of our total order book versus 3-4 years ago, where road was 90% of our order book.
Right. So Rohan, if you have to talk about the pandemic, and for a company like yours, you've secured record orders amidst the pandemic. You added 2 new states. With regards to diversification, also, as you mentioned, that now less than 50% order book is coming in from somewhere around the road sector. And you've got the largest order book size in the history of the Buildcon. Was this something which was supposed to be your milestones that you would have crossed in calendar year 2020 or FY21? Or was this something which you were planning over the next 2 to 3 years?
No, this was always the plan. I mean, in terms of first, if I were to speak about the diversification, that has been the plan for the company for the last 3-4 years. That we wanted to, as we were growing in size, we realized that we cannot continue to have that similar kind of order book from the road sector alone. And hence we decided to diversify, whether it was irrigation project, whether it is metro project, whether specialized bridges, tunnels, mining. So all sorts of different projects, that airport projects. So everything that we were doing, the idea was very clear that we want to make sure that our strength is execution. We have our own equipment, we have our own people. So whatever this existing capital base that we have, how can we use it in other areas of infrastructure? So that was a plan, and this is a journey. So even right now, this has been a journey, and which is why we've reached where we've reached in terms of this very diversified order book. So not just sectorally, but also geographically, we are present in 19-20 states. That was a journey that we embarked on. Now, in terms of the overall order book size, every year the company has endeavored to keep on growing its order book, which has also been proportional to how our revenues have kept on growing. Now, the last couple of years have been a little, I would say, docile in terms of that, because of a lot of extra events which were outside our control. Elections, slowdown in order book from the national government, delay in getting appointed dates, 2 years of excessive rainfall. So all these things that have happened over the last 2 years, which have impacted revenue, or in fact also impacted the order flow, were outside and beyond our scope. But now, with 1 year in with the government, and now the government looking, in fact more than that now, the government looking to expand on its infrastructure program, we feel that the order book should grow for the next 2 to 4 years, given the huge focus that the government has on infrastructure.
Right. So, do you think that the current growth rate is something which will be sustainable over the next 2 to 3 years?
Yeah, I think over the short term, I do not doubt that, because the government at every forum and every level, whether it has been the Prime Minister's office or our Honorable Mr. Gadkari ji, everyone's been speaking, or the Honorable FM, everyone's been speaking about how they need to keep investing in infrastructure because of the effect, the multiplier effect that any investment in infrastructure has on the overall economy. So I do not doubt, and especially now that they have a blueprint with the national infrastructure pipeline, uh, I think the government is very focused on delivering and doing that.
Right. And then with regards to diversification as well, Rohan, I think roads, which was almost around 85 to 90% back then in 2018, has come down to less than 50% now. What's the aim? How much do you want to get the contribution of roads down to? And which are the other segments of business that will see an increase?
See, our idea is instead of putting it in terms of what would be the quantum or the percentages, the idea is we already have a certain bit of equipment available for road building vertical. So we will want to make sure that all of that equipment is always utilized, and reducing investments in it going further, making sure that this is fully utilized, and that would be our first agenda. Now, the new investments that we're making in our other areas besides roads, where we are seeing more and more opportunities coming in. So that's how we are sort of thinking about that. We want to make sure that we are utilizing our assets completely for the next 3-4 years. This is the way that this industry is going, and that's the agenda. Now, where it will land in terms of percentage is, I think it's too early to comment. It will all depend on how because tomorrow, how the orders are going to shape out in different industries is something which is completely beyond my control. All I can tell you is that, yes, I see a lot of orders coming in different areas, and we are looking to capitalize on all those areas.
Right. And overall, if you have to talk about COVID as well, issues that you were facing, say, in terms of raw material, labor, which were acting as hindrances then, how are they now? I mean, are they completely resolved, or do you think the sector still needs some more breathing space on that front?
The issues around the labor, the material, sort of unavailability, all those issues have been resolved. Now you have complete labors on site, the material supply chains, all of them, the logistics, all of it is completely back to normal, and it has been back to normal for the last few months. So on that side, there is no issue. Work is going on at its record pace, but obviously because of COVID, every company has taken a hit on their profitability, on their cash flows. So all those things which have sort of definitely impacted everyone will take a while for all companies to recover. It's because we were still paying all our people their salaries, still had all our fixed expenses that were still going out. So those and while revenues had taken a bit, and the thing was, the revenues took a hit in a quarter which is usually very large. From Q4 and Q1 are two really big quarters, because you have no rainfall typically. So what happens is at least for the last couple of years, we've seen that even the middle of Q3 has seen rainfall. We've seen rainfall till November mid, and so that has also been that has impacted revenues. But from January onwards till the the onset of monsoon, which is sometime in June, we see nice clear weather, and work really happens at a record pace. Now those months were hit because of COVID, so the cash flows obviously got hit and the profitability obviously got hit. But like I said, it's same for everyone else. So that has taken an impact for everyone. But besides that, now.
So in terms of execution, how would you describe it right now?
Execution is back to pre-COVID levels. That's the best way to sort of say.
Okay. And overall, if you have to see with regards to the working capital days and creditor days, how are you seeing the cycle, and when do you expect it to normalize?
The cycle is pretty much in the regular sort of cycle that we had. So there hasn't been any major slippages or anything. been almost around the same sort of days as it used to be, and I see that going in the same manner. Maybe there'll be some reduction going forward, but more or less it has been pretty much okay. Good part was the government also on its part, because they relaxed the payment milestone, the Schedule G and Schedule H sort of milestone payment requirements, and the month-on-month billing has been going on, which now they've very recently they've said that they will continue this month-on-month billing sort of process till June, if I'm not wrong. For the first 6 months of this year, they're going to continue with the same methodology to make sure that there is ease of liquidity into the system.
Right. And overall, Rohan, if you have to look at the debt reduction strategy as well, that was one of the agendas as well that we were looking at over the last couple of years. Uh, Taking COVID situation into consideration, I know the company has availed moratorium as well. How are we on that path? And do you think the debt reduction plan, if we were planning to be, say, debt free, maybe in the next 2 years, is that plan postponed, or how are you treating that strategy?
Obviously, COVID has taken a little bit of the wind out of our sails in terms of the debt reduction program. We had gotten our debt equity to less than 0.8 in the last financial year, and that was a very conscious sort of decision by the company in terms of, while we were investing in new equipment, while we were still investing in projects, we still were reducing our debt. We were having enough free cash to also reduce that. This year, obviously, we've had to avail additional facilities from the banks because of the COVID lockdown. But I think over the next 2-3 years, we should again see, so idea was this year we wanted to hit debt equity of about 0.6, which obviously has not happened because of all of this. But I think next year we should see our debt reduce meaningfully again. And for the next 2-3 years, because our investments in equipment and all is going to be reducing, while we are also going to be getting back all the capital that we've invested in our PPP assets, the road asset portfolio, because we're also in the process of monetizing them. So what the government did in this lockdown, they also changed the rule for selling out your complete equity from 2 years to 6 months. So what the money that we were going to expect, so till now we could only sell 49% at COD till COD plus 2 years, and only after COD plus 2 years you could sell 51%. But now, because this has changed, that after COD plus 6 months you can sell complete 100%. We should be, once both our deals of our asset monetization completes, we should be able to get almost 2,000 crores in the next 2 years, next 2 financial years, because all those projects are getting completed. So cash from there will also keep on reducing. So there should be a meaningful debt reduction coming because of all of this capital coming in.
Right. So what's the anticipation on the completion of the SHREM deal? Because I think in totality, there are 4 SPVs which are still in process, right?
The SHREM deal is complete. SHREM deal has no problem. After that, we had signed another deal with Cube Highways for 5 more projects. That is also going on track. And then we are in the final stages of negotiation / closing with for our 7 projects. That when it gets done, so we would have completely sold off our entire portfolio of 12 assets. And through that asset portfolio, we are expecting to receive about, like I said, 2,000 crores of capital that should come in the next financial year and the next. So about 1,000 crores of money coming in both the next 2 financial years.
Right. And any impact on the cost side, which would impact margins?
Margins have obviously been impacted when you had people, standing and, all idle sort of equipment and manpower. They have been impacted, which you've already seen in this year. The margins have been impacted. So this year at an EBITDA level and at a PAT level, those margins are lower than what we had originally envisaged or anticipated. But it is the same for everyone. So,
right. And Rohan, overall, if you have to look at, in terms of the different segments of business where you're operating in right now, for the next 3 to 4 years, which segments do you think are going to be growth drivers?
For us, road is always going to be a growth driver, because road business seems to be very robust, and the government has very strong pipeline that they are wanting to put in the road business. Even if you look at the national infrastructure pipeline document, you'll see that roads is the second highest sort of allocation in terms of funds for any sector. So we see that, we see irrigation, we see specialized towns, we see mining as a big driver. So all these areas that we're currently working in, or airports, so all these areas that we're already currently in, we see all of them to be very robust. In terms of irrigation also, we're very, very optimistic because of the Nal Se Jal Yojana that the government has been talking about. So, so a lot of river linking, dam creation, water supply projects, all those should also come in the next few years.
Right. And in terms of the order wins that we've seen in FY21 so far, what's the kind of revenue recognition you're seeing out of those?
I mean, very, very difficult to right now just pinpoint how much would come in from projects, because it will be a small amount. We already had a very, big order book, existing order book that we were still renewing. So I wouldn't have the numbers as of on the top of my head. But in terms of total revenue for this year, we are expecting it to be somewhere around the last year's revenue numbers as well.
Right. And very lastly, if you have to look at FY22, can we expect a major bounce back, taking a slightly lower base into consideration? Rohan? Yeah, Rohan, yeah, my question was taking FY22 into consideration, do you think it will be a slightly higher growth and a higher execution in terms of 22?
Yes, next year should be a higher growth year for sure, because we have a very strong order book already in line. The projects are firing on all cylinders. It's a nice diversified order book. So next year for sure we are targeting. Even this year there was a nice target that we had in mind. It's only because of COVID that all those targets have kind of fallen by the wayside. But next year we're very sure that we will be crossing easily 10,000 crores plus of revenue. We'll be doing that easily.
Right. And Rohan, lastly, any wish list from the budget for the infrastructure sector?
Wish list? Well, there's already so much the government is talking about. So all I can do is like wait and watch. Whatever easements that they could go give that. Maybe for the infrastructure players, maybe reduce taxation at some level, or bring back something of what an 80 IA was there. So those can be the only things that I could look. Whatever method would help improve liquidity and cash flow for companies who have already been impacted by the COVID.
Absolutely. Thanks a lot, Rohan. Thank you so much for being a part of the show. Great insights, and hoping to speak to you soon again. Thank you so much and stay safe.